Okay, so just a quick update on the beautiful situation that is lining up on AUD USD. So what kind of situation we have now? First of all, what did we have? We had this W formation, and if you remember, we wanted to see the market make a pullback, and that is exactly what the market has given to us, a nice pullback to the 0.382, and then the market is continuing to the upside. So basically completing this another impulse correction and impulse pattern, as it has done here, impulse correction and impulse pattern. Now, the point about this one with respect to this pattern is that here the market inside of the retracement, instead of creating basically a simple impulse and correction, it created a complex correction. So when the market now is making the move to the upside, what we are having is basically an overextended W formation. Now, after an overextended W formation, what do you expect? You expect the market to make a move to the downside. Now, the more the W formation is overextended, the better it is. Why? Because you will have a better risk to reward when you will actually find, if you actually find an entry for the move to the downside that satisfies all your rules. So basically, if the market will go a little bit higher, it would be even better. Now, if we go and see what is the situation from a COT perspective, basically what hedge funds are doing on AUD USD. If we go and get the data for the AUD, basically what we're actually checking is AUD USD. Why? Because all currencies on the spot are traded against the USD, as I have already explained. And what we can see is that during the move to the upside on the AUD USD, what has been happening from an institutional level is that no actual longs have been added. Longs have actually been closing. As you see, hedge funds close a lot of longs. There hasn't been proper shorting yet, and that is exactly what you expect also when you have basically an impulse to the upside. You don't expect immediately to see the shorting. You first need to see a deceleration, and then shorts can start to be added. But at the moment, from a long perspective, there are no longs adding, meaning that definitely they expect a push to the downside as well. So going back to the chart, basically what we're doing it with students. Now, first of all, it's pretty clear that if we look at the market from a 4-hour perspective, everything is still pushing to the upside. There is zero confirmation for the short yet. So obviously we can't be looking at the short immediately, but what we will be doing, as usual, trading is reactive, not predictive. So what we will be doing, we will be monitoring price action on the 4-hour time frame inside of this area. If the market will go higher, it's even better because we will have a better risk to reward for the push to the downside. But anyway, we will be monitoring price action on the 4-hour time frame, waiting for the market to shift from a bullish market to a bearish market, and then to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a good risk to reward and good probabilities for a nice push to the downside. Now, if you enjoyed this free analysis and education, make sure to drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.